Hey everyone, it's Kirk here again at Option Alpha. So tomorrow we have the Fed announcement, and what I wanted to do in this video is quickly show you how I'm changing up one of my bots to use automations to change exit options for the window of time that the Fed is going to announce. So I want to switch up some of my exit options on the fly so that I potentially have the opportunity to capture a bigger profit, give it some more room to run potentially, because we know there's going to be a lot of volatility around the Fed event. And then right after that Fed event happens, about like 30 minutes later, I want it to switch back to its original setting. So I'm going to show you how to do that. So really quickly here in the calendar again, tomorrow we have the Fed announcement coming up. So if we just take off all of these like CPI and earnings reports and stuff like that, we see we have the Fed FOMC meeting tomorrow, which is the 26th. So we know that's coming up, and that's also integrated into your bot so you can check decisions around this too. So what I'm going to do is I have this current bot that I run, which is just called Kirk's Trade Ideas, live trades that I do. And most of these trades, when I get into them, I use a standard setting of exit options. So you can see that over here. My standard setting for most of these is 50% profit taking and then exit the position about 2 hours before expiration. And I have a pretty general bid-ask spread guard in here of 20 cents. That essentially protects me from a lot of volatility in the market. Now that can be good if we just leave it alone for the Fed event. That will definitely protect from really wide swings in the Fed. And what I don't want though is I don't want that to be overly restrictive, which is why I want to add an automation here to mine that when the Fed actually has their announcement, that window of time, I want the bot to update all of the exit options for positions to give it some more room so that if we do get a really wild swing in one direction, I don't have this bid-ask spread that's stopping me from exiting a position at a profit, potentially even a higher profit. So what could happen in this scenario is that let's say you get into a highly volatile market with like the Fed, bid-ask spreads start to really widen. Well, that bid-ask spread is going to guard and protect the position and basically stop it from taking any profits if the volatility is too wild. And so generally that's okay. We generally want that. We can use that as protection, but sometimes for things like Fed events that are coming up tomorrow, maybe you want that to be a little bit more lenient and then use some other tools that we have for protecting against those wide spreads or sending orders at the mid to try and get your potential profit here. So that's what we're going to try to do inside of here. So these are the general settings that I use. So again, what we'll do is we'll come back to these settings inside the automation. So 50%, 2 hours, 20 cents bid-ask spread guard. That'll kind of be our base settings that we'll use. So I'm going to go over my settings. I'm going to add an automation here. I'm going to select an automation that I want to add. I actually have a folder saved in my library of FOMC. I've saved a bot template or shared a bot template before in the community that has kind of these built out for you. So I'll put that in a link here at the bottom of the video so you have that. But there's a bunch of different scanners and monitors you can use that you can bolt on. They have examples of scanners that adjust prior to the meeting, the same day at a specific time, an upcoming meeting or past meetings, and then challenged ones. So what I'm going to do is I'm going to use this one here, which is the FOMC auto adjust bolt-on. This is literally meant to be bolted onto your bots and automations if you want to. And then I'm going to run it as a monitor automation. The reason I'm going to run it as a monitor is because it's going to monitor these open positions that I have and then adjust exit options for those open positions just for the window of time that I want. So I'm going to add that, and then I'm going to go into the automation here. And you can see the first thing it's going to do is it's going to repeat through each position. That's what I want. And then I have this decision that's in here which says that the FOMC meeting is scheduled for today. So it can still run today, like right now, which is the day before. But tomorrow it will be scheduled for today. And the market time is 1:30 and before 2:30. So essentially we're trying to capture that time period right around where the Fed is going to make the announcement, about 2 o'clock in the afternoon Eastern time. So that's what I want. And then I have some other ones in here. I don't really need this one here, so it won't go to the yes branch on this one, but you can also, adjust if it's a put spread or long call spread. You can adjust to certain profit targets. For mine, these will all like X out because I don't trade any of these in the bot, so it'll just skip over this one and it won't actually do this one, and it'll continue on to these ones. So is the position a credit spread? Yes, these are all credit spreads that I'm trading. So short call spread, short put spread, or neutral iron condor. And what I'm going to do is I'm going to use this decision or this action to update the exit options. So it's going to pull in the position data. I'm telling it it's a credit spread. and then I can update the exit options. Now in this case, what I'm going to do is I'm going to update my exit options to something a little bit more aggressive. I'm going to say 80% of credit. We're going to give it some fast pricing because I want it to go through prices fast. If there's an opportunity to take a higher potential profit, I don't want to miss that opportunity using slow or normal or patient smart pricing. 20 seconds after the Fed, that's a long time. So I'm going to use fast. So it'll send orders every 5 seconds, trying to get that out and filled. In this case, I'm going to clear my trailing stop. I don't want to use a trailing stop. Markets could be super, super wild. You can clear out everything else because just for this window of time, that's the most important thing that you want to get out, is you want to get this profit taken out. And then the last thing that we want to do is we just want to move up the disabled exit options to maybe something a little bit more aggressive, like 50 cents. I mean, you literally could move it up to something even higher, like 75 cents if you want to. Originally, remember, this was around 20 cents. And so the goal for me is to not let really volatile markets step in the way of taking a profit. Now remember, when we do this final pricing for smart pricing, it will automatically just lock in that profit target. So even if volatile markets are there and there's really wide spreads, it's not going to go beyond what it needs to capture your profit. So if you want to be a little bit more cautious, maybe you move that back down to 75. Maybe I'll just keep it at 75 there too. Maybe 80 is too much. So I'll keep it at 75. And then so that'll update the exit options for those positions. We're going to do the same thing for the iron butterflies. So in some cases, you can completely disable them if you want to. So maybe for your neutral positions, you disable them, but I'm not going to in this case. I'm going to go here and I'm going to change those to 75 credit. We're going to do fast smart pricing, and we're going to move this up to 75 cents. So we're going to give it a lot of room. I don't want a volatile market to stop me from taking a profit. Again, this is just in that window of time that the Fed is announcing, and it's about 2 o'clock in the afternoon, that kind of hour around that range. So we're going to save those. And we're going to actually go ahead and update these captions because those captions are now updated for the exit options. Same thing here. We'll just edit those captions so we know exactly what they are. Okay. And then after this, so this is what's really cool, right? Once this is done, and I'll just let this automation run, we'll kind of go back and review this after the Fed's decision tomorrow, maybe the next day. And so after the Fed is done, and it's not today, and it's not between that time, then this automation will then go to the no path. And that's great. That's what I want. And down the no path, we're going to have this additional action to update exit options and return everything to normal settings. So this is, I think, what's super cool. Like just for that time period, I'm going to update my exit options to try and capture a bigger profit if it's there. I still don't use stop losses, so I don't care about that. And then after that time period's done, reset the exit options to their normal settings. So inside of here, this is where you want to put your normal settings, whatever your normal settings are. For me, it's 50% credit. I'm going to remove the trailing stop for these positions. So remove those, reset the expiration to 2 hours before. And I usually use a couple cents of slippage here, so like 4 cents of slippage from the mid, and then disable exit options if it's more than 20 cents. So that's basically my standard setup for most of these on this bot. So 50% credit, 2 hours before, so I'll let it run most of the time until expiration, and then disable exit options if it's over 20%. So that'll be kind of the normal setting. So it resets it back to what I call normal settings. So once I'm good to go here, I just simply hit save. Now that's saved in here, and now that I have it saved, what I want to do is I want to go ahead and turn on automation. So this will allow it to start running. Remember, today when it runs, it's not going to go through any of these decisions because the Fed doesn't actually announce today. So you can actually go in here too if you wanted to and run a test. And again, you can just check this box to prevent the bot from actually trading, but it won't trade anyway. It doesn't matter because it's not going to go through those decisions. The Fed's not announcing today. And you can see how it would behave for each position. So in this case, it would say, is the Fed meeting scheduled today? No, then just reset all of the exit options to their normal settings. It basically just means they stay at their normal settings anyway. And so it would continuously go through that process if you want to. So that's how I'm going to do it today for some of my bots. So again, this is a bolt-on that you can add to your bots. We shared it in the community. You can clone the template, get all the different versions. But this is just a good way to take advantage of a pretty unique opportunity that doesn't come along often, and you can use automations to automatically shift up your portfolio and change positions as you go, and then shift it back once that event is done. So have a great rest of your trading day and week, and until next time, happy trading.